Hello, hello, traders. Welcome to the trading trail. Okay, today is the 25th day of the trading trail. This is the series where I go ahead and try and recap all of my trades that I decide to take every single trading day of the year 2025. Currently, we are on the 25th day of the trading trail. So let's get right into it. Now, the past few weeks have been very, very slow and inconsistent. Now, today is a pretty big, sizable red day for me. My goal going in the future is going to be mainly going to be starting to shrink these red days. I'm okay with the red days as long as I'm still making good trades, but having a $700 red day with my account size, that's still a lot. That's a pretty sizable amount. So I want to start scaling those red days back a little bit, and hopefully we'll start to kind of continue that series of taking two steps forward and only one step back. I would kind of count this as two steps back. That's kind of the day that I had today. Now this morning was a very slower market. I did miss a lot of opportunities, and the biggest opportunity that I missed today was on MGOL. MGOL. My oh my. I was actually really liking this look on MGOL, and I'll kind of go into why that was. But first, let's go into some of the mistakes that I ended up making on why I'm sitting $700 in the red today. And the first trade of the day was on UPC. Boy, oh boy. Okay, so UPC, I'm not a big fan of trading these penny stocks. When I'm looking at the top gainers list and I only see penny stocks setting up, honestly, I get very, very sad that day. And that was the same feeling that I had this morning. Most of the stocks that we were seeing set up or even show up on the top gainers list that fit our criteria of having a low float, decent enough volume, and are currently moving, those three criteria, the only ones that we really had focus on were penny stocks. And boy, oh boy, does that suck. And now that's kind of been the theme this entire week. This has been a penny stock trading week. And it's just not my forte. Now, there's probably some uh, things that I can look into on why that might actually be. Maybe it's because when I'm trading, I trade with offsets. So when I'm buying at the ask, I'll get a lot of slippage on that order. Now, at the same time, these penny stocks tend to be very, very wicky. And sometimes trading these, it goes against one of my rules of when candles get wicky, trading gets icky. And you often see that on these penny stocks. So, like for example, I'll highlight some wicks here. That's a massive wick. This entire range is very, very wicky. This looks like a barcode right now. It just makes it very, very difficult to trade. And UPC was no exception. This one was difficult to trade. Now, what I am upset about is I think I'm just have a very over I think I am building some bad habits of over trading. Having so many buys in right here is the definition of over trading. In a hotter market, I can get away with it. But in these slower markets, I should really, really be sizing down, having one entry right about here, and then taking some profit off the table. Now, I took some profit off the table right here, but I incidentally add again because I was like, you know what? If we just tested the 10 on the one right here. So I was like, you know what? We just tested the 10 on the one. Maybe that's going to be enough strength for us to get that popping move above 30 cents. Oh boy. Oh boy, is that wrong. Oh boy. Now, when I see a topping tail like that, that's a pretty good signifier that the move is the first initial impulse of that move is on its last leg. So I really when you start paying attention to the individual candles, I feel like you can get lost in thought. But one thing that I do want to start paying attention to are these topping tails. This candle right here, how it's a big red candle and then a small little body like that, that's a topping tail. And especially on these wickier candles, I mean, right after seeing that, like it's very reasonable that I completely close the position right about here instead of just waiting for the 10 on the one to fail. And then at that point, I was also thinking, you know what, the support of the downtrend is also going to be like right here. If we're able to hold on the 25 on the one, but I get caught on this massive flush right here. Wow, does that suck? Wow, does that suck? So this stock, I think I'm red like $300 on it, and uh, so like I think cutting you having this area as the mental stop loss is perfectly fine. I'm upset that I got caught down here when price was moving so fast below that mental stop loss. So I should have had the finger on the trigger, should have cut right here. At my proper mental stop loss, I just get caught on the flush, and then this turns into a much more massive loser. I think if I cut at my mental stop loss when it was up here around that like 27 level, um, I think that this would have only been about 150, maybe $170 loser. And right after this loser, I kind of start trading right after that, thinking I have to make up that loss on the next trade. So this kind of goes into another bigger thing that I'm starting to diagnose in my trading is when I get one loss, things spiral right out of way very quickly sometimes. Because most days where I have my first trade, a green trade, I turn it into a phenomenal day because I place a reserves and I don't want to give back those profits. So having that first trade, a winning trade, normally mentally helps me out at least. Whereas these days where I start red, I start revenge trading very, very quickly. And I think this is also one of the bigger things that I was doing in December. Now that I really start to think about it, um, this revenge trading, because like if we go to this next setup, this is just pure revenge trading right here. Like I'm not waiting for a setup. I know not to trade this. I'm thinking I'm gonna get in for a break of 306 right here, and then we're gonna start holding. I was like, you know what, the 25 on the one, we just basically came down, tested that support. Then we're gonna start trading, making a move to at least test this area or make a move somewhere above the 316, so then we can draw in a downtrend from there. And I was thinking I was playing it early enough to kind of walk away with profits no matter what. That wasn't the case. Was not the case. And again, playing with full position sizing right after a loss? Absolutely not. I think if I start the day on a loss, I need to start immediately scaling things back and then just start sizing down. It might take me more trades to get back green on the day, but hey, that's fine. Um, because again, it's a marathon, not a sprint, and this is kind of very, very, very aggressive. And again, like I really should be willing to cut these a little bit quicker. It's just difficult kind of telling myself that, especially having a cash account because I was like, you know what, this should be enough breathing room because if we find support on the 25 and the one, then this trade can still go underway. I am happy that I ended up closing the position right there instead of getting chopped around right here. Again, this morning was a much, much slower market. So I thought I was trading off of support in this case. I most certainly wasn't. And one of the deciding factors on like why I shouldn't have taken this trade, again, hindsight, but VWAP was still right here, so it's very difficult to take a position when VWAP is still above price because the biggest move that you kind of expect to see is price to come up, test VWAP, and then come back down. So that's kind of what happens. Price comes up, then hard rejects from that VWAP, and I get caught in that. Now, at the same time, I shouldn't be trading below VWAP, and at the same time, I shouldn't be trading when price is so far extended from the 10 EMA on the 5. My thought process in the moment was, you know what, the 25 on the 1, oh my, the 25 on the 1 is holding here, so that means that the 10 on the 5 is going to be holding in a stronger way. In a stronger market, there's a chance that a trade like this works. But in slower markets, it's just too aggressive. It's just too aggressive. And the only reason I like decided to play aggressive on this is because it was right after a big loss like this. So I really need to kind of pay attention to maybe mental checks or I think maybe trading in a slower style, maybe off of a 5 minute chart, is going to be much healthier for me. So I think I'm going to default to only looking at the 5 minute chart. And then once I see the setup formed on the 5 minute chart, that's when I drill down to the 1 minute. Because when I am just looking at this, I'm like, oh, we just found support. We're going to make new highs right away. It's like that's a little bit too quick of a turnaround, especially in a slower market. Because if I pulled up the 5 minute chart on CDT, like there's no argument to be trading that. Yeah. No argument to be trading back here. Absolutely not. This isn't a trade. And it's even more obvious when you pay attention to that 5 minute chart. So taking things a step back and actually paying attention to it. And now that I mention it, like a 5 minute chart, look at this. This is a beautiful setup to play CDT later on in the day. This is the first time that I'm actually seeing that CDT made some larger moves. But again, that doesn't mean I should have just held and hoped through my entry here at 8:20 in the morning, holding until it tests at 350 at noon that day. That's just holding and hoping. You're going to get chopped around right here. But there were plenty of signs of strength within this area right here. So again, paying attention to those 5 minute charts, I think I'm going to start looking for the setup on the 5 minute chart and then drilling down to the 1 minute to look for entries. Because again, if we go to we have a good setup, downtrend break a VWAP, and then maybe playing a 294 break here would have been absolutely phenomenal, and then you would have been caught on this move up to that 350 resistance. Wow, that would have been phenomenal. Now let's go to the 1 minute and see what it looks like from there. So we get a break, tries to hold above VWAP, finds the 10-1, then finds resistance at that 294. Yeah, so playing the 294 here, whoo, would have been money. Money. And then you probably could have found an entry just like this. Perfect break of the 294, so you could have been adding shares right here. And then, yeah, again, I'm going to play so much more patient next week, and I'm only going to be looking for the setups on the 5 minute charts. I'm good at spotting the larger moves, so me trying to scalp entries right here and immediately turn around my P&L on the day, it doesn't make sense to do it. I need to stay way more patient on my entries, because, like, I would rather trade this than this. I hate the front side, and this is trying to catch the move on the front side. So a lot of stuff to study here. I think this is going to be a very good decision for me of only looking at the 5 minute chart and then going from there. Um, yeah, I think that's going to be for the best, because like this is just there's no argument to even trade that. Like very tough, you know. If I was like if I was approaching to like after that trade, it's hard for me to be very optimistic. It's hard for me to be very pessimistic with the trades. It's too easy to find reasons to take a trade, and it's more difficult to find reasons not to take a trade. And in this case, there were two big reasons for me not to have taken that trade. Price was below VWAP and extended from the 10-5. The thought process was, oh, 20, we just found support at the 25 on the 1, which means that the 10 on the 5 is holding up. But if you just go to the 5 minute chart, it doesn't look like it by any means. So, God, oh God. So CDT ended up making some very impressive moves later on in the day. I think that's going to be the game plan for next week. Now, I'm optimistic. Part of me believes that we're going to see some phenomenal momentum next week, because normally, I don't know if this is true, if there's any validity to this statement. But whenever you see these long stretches of penny stock after penny stock after penny stock, eventually you start to see those higher price tickers kind of come out of the woodworks. And I feel like bulls really like to pile onto those later on. So after, we've had like a week and a half, maybe 2 weeks of just penny stock after penny stock after penny stock. it's got to turn around eventually. So I don't know if that's going to be next week or the week after, but I'm cautiously optimistic for Monday. But again, I am going to really, really put some pressure on myself to look for the setup on the 5 minute chart and then drill down into the 1 minute. Because, like, me trading this one right here, when I have it zoomed in like this, I don't, there's no bigger picture here to trade off of. I'm just like, all right, I'm going to scalp an entry right here. We're going to get that 306 break. We don't get the 306 break. So then I'm like, you know what? If price holds on the 25 on the one, then all is good. And then, yeah, we end up failing. So, uh, boy, oh boy. Boy, oh boy. And again, if I'm scalping that entry at the 306 and we don't get that break, like, just cut. Like, you're trading through the road here. Hmm. A lot of stuff to think about. A lot of stuff to think about. I think I'm going to stare at this chart a little bit longer and go ahead and study it and kind of figure out what more I could have done or what else I need to be changing about my trading. So I appreciate you guys for joining me on this trading trail. It's been a good one. Unfortunately, again, we're sitting down $700 on the day. Definitely could have been a better day. I know plenty of people were able to finish green. I wasn't one of the lucky ones. I got caught on some pretty nasty, nasty trades, and it's more of my fault. It's more my fault than anything else. UPC, I had too many higher averages in that, and I was really looking for that breakthrough three. Like, if we got that breakthrough 30 cents, I mean, holy crap, it would have been a massive winner. But on these slower market days, it's every time I feel like I end up breaking this rule right here. When candles are wicky, trading gets icky. So let's go over this rule really quick, and then we're going to call it a review. But when candles are wicky, trading gets icky. And if you look at LTRY, I mean, this is a wiki chart. I traded this one as well. You see, you have these very long topping tails. The bodies of the candles don't really look full. It's trading on like no volume. When candles are wiki like this, trading just gets difficult. It really does. And very, very unfortunate. Same thing on UPC. These very long candle wicks just make it very, very difficult to actually trust the price movement, in my opinion. And when candles are like wicking through our supports that we know need to be holding for a stronger look of that move, like, for example, look at this. Price comes up, extends, we get that 28 break, and then price finds resistance right here at that 30. In order for the best sign of strength for the break of the 30 area, price would need to hold the support of the downtrend here and the 10 EMA on the 5. Well, price immediately wicks below the 10 EMA on the 5 and then quickly regains it. So, like, you're just getting wicked out. Candles are so wicky that it's very hard to trade something like this because of the just wiki and unpredictable movement. Now, price finally gets back above and then holds the 10 EMA on the 5. But what's this? Continually wicking back down. Maybe it's wicking down, testing the support of the downtrend, but it's just not a good look overall. We want to find the ones that are obvious. This, this, not obvious. It's not obvious by any means. So that's what I mean by it's just a completely. The chart is very difficult to trade because of this, because of this, because of this. I mean, God. God, oh God. And like this movement too, that's just ugly. It looks like a barcode. It's not a stock chart, it's a barcode. But that's enough of me complaining about that. I mean, I had multiple reasons not to trade this one, and I decided to trade it anyways. I need just because other people are trading something doesn't mean that I have to. Which is something that I'm really starting to learn. Like, there's a saying for like people who ride motorcycles of when you're riding a motorcycle with a pack of other motorcycles. There's a saying where you have to ride your own ride. When the person in front of you starts to go faster, you pressure yourself to go faster and you pressure yourself to, I need to chase this person in front of me, even if it's risky, even if they're a better motorcycle rider than you want to try and catch up with them. which means you could be putting your own ride and life at risk just to ride with them. I have to ride my own ride. I have to trade my own trade. So just because there's an alert out there or someone's talking about how they have this hypothesis on a setup, this is where I really need to build up some more autonomy for myself of like going into this. Like I don't know what it was me looking at this setup, but like mentally, oh my god, mentally I'm like I'm this chart looks horrible. Mentally, I'm already preparing myself for the loss. I don't even know if that makes sense. But like mentally I was like, the movement I'm seeing this morning sucks. I'm preparing for it to be a red day. Right away. So I don't even give myself an opportunity to be green because I'm mentally ready for the loss. So like even though that there were opportunities to be red right there, just because I didn't like the setup and I was like, you know what, we're probably not going to get that 30 break, but I try to play it anyways, and all of these different reasons, I I had plenty of opportunities to be green on this trade. You know, same thing with CDT, same thing with LTRY. I had opportunities to be green. But overall, I didn't like the setup and I didn't know how to trade my trade. I was trying to trade other people's trades. And I think that's kind of why I'm, you know, FOMOing in on those 1 minute charts instead of zooming out and seeing the setup form on I need to start paying attention to that bigger picture. And that's going to be the game plan going into next week. So I hope you guys have enjoyed this trading trail. It's probably been just me rambling. There was one amazing trade or opportunity this morning, and that was on MGOL. MGOL popped on some news back in after hours the day before, and then consolidated very nicely, got above VWAP. We were able to draw on this nice downtrend. I was looking at it right in here. Again, this is where I need to learn to trade my own trade. I had pretty high confidence in this one, and I was messaging a few other people. I was like, you know, I'm surprised. Like MGOL looks pretty good, and I end up staying away from it for many different reasons. But again, this is where I need to gain the autonomy of trade my own trade. And this is a great example of that. MGOL was moving on some newer news. I wasn't a big fan of the longer time frame setup on LTRY. It made a move off of like 40 cents and it's already at $2. Like I don't think it's gonna get that parabolic momentum all the way up to $4 in this slower market. So I was kind of expecting bulls to go into, you know, the stock that was trading on newer news. And that was MGOL. So I was really thinking on trying to play this 33 break. And I decided not to because I was already I was already trading another stock. So, man, oh man. A lot of stuff to learn from today. I'm looking forward to next week, and I hope you guys have enjoyed this trading trail session, and I will talk to you guys later. Have a good weekend, everyone. Bye.